Good morning, everybody. All righty. Markets are up, backing off a little bit here. New all-time highs. And how is markets ignoring the collapsing dollar? Good morning, guys. Um, it's it's so interesting. I mean, it always is. As long as I'm doing this, there's always something interesting happening in the markets that like that just doesn't make sense. But at some point, it must make sense. Or, as I had mentioned the other day, is it just complacency? I don't know. It's not like the markets, you look at the S&P here and we talked about this. It's not as if it's advancing in such a certain way. When I say certain, I mean in such confidence in how it moves up because of all these overlapping bars. Now, from the bottom of the range here up here, that moved up with, I'd say, relatively pretty good confidence. Um, Never violated a prior day's low. And that's one of the systematic ways that we look at whatever it is that looking at and considering a trade. Is it an uptrend? Is it a downtrend? Is it a sideways trend? If it's moving up, does it violate on a closing basis at a minimum a prior day's low, and then does it go below some consolidation or a pivot? So now that the S&Ps, you can see here, making new all-time highs, and this is, I'm eyeballing this, but it looks like a new closing high. Um, Maybe by a few pennies. I don't know. No need to measure it. I can just see it's up there, and this is the close, and it looks a little bit higher. Yesterday it looks a little bit higher. So new all-time highs, but a trading range, and now it's gapping up. Bottom of the range, top of the range, gapping up increases the probability that it's going to gap and crap. Now, how big does it gap and crap? Or, it just may be a red bar and go sideways up here. We don't know. What we're dealing with the current moment, we look at where prices came from, where they're at, and do we get a reversal bar? Common sense says it would make sense to get a reversal bar today since it's moving up to the top of the range. We'll see if that happens. Then if it pulls back, does it close below? Well, it's an expression that we use, Robert, gap and crap. It's like if something is moving up a large amount and then gaps higher, I say we refer to that as a novice gap, whereas something that comes off of a low, we'd call it a professional gap because it's on support and it should. Well, on the daily time frame, intraday charts rarely gap unless it's a thinly traded stock or it was halted on news. So yes, on a daily time frame. And you can see here on my chart of the spiders, prices are coming off of the low, and they were, you know, up there gapping. Now, I wouldn't call that an unusually large gap to gap up there. I mean, if it was gapping up to 700, a whole number there, and I would say odds are pretty darn good that's going to be a gap and crap. So a lot of this is just as we look at stuff, we say it's common sense, and then on the other hand, we look at certain stocks, like we look at gold, and Dan said to me this morning, look at gold, geez, like it's up again. And so while we look at something and say, you know what, that's up an awful lot in a short amount of time, um, does it make sense, right, to us or me or you or whatever, uh, that it's moving even higher after being extended? And so another one of our expressions is extended can become more extended. And that leads to, hey, you might think something is up a lot, but has it closed below a prior day's low yet? Unless it's done that or gone sideways or you got some kind of a breakout failure, don't be shorting it. I mean, you could be nimble intraday and do it, but it's kind of stupid to be shorting strength. when there's no sign of weakness yet. So this is not that big of a gap. And you can see my cursor on the 5-minute chart there on the lower right. It's not gapping up much at all. Now, one of the other things that we look for, and I explained this quite thoroughly in the gap course, trading gaps, is, I'm looking here, right? So I can move this out of the way. Something that's gapping up. And so this is the day chart. This is the overnight, um, pre-market trading. It's gapping up from an end of day base, meaning it went sideways, right? It went sideways yesterday after going up. But after 11 o'clock, nothing happened. Dead air, so to speak. And so now it's gapping up, and it was higher. As I move the cursor up there, it was higher. So theoretically, right, this is support, and there'll be buyers as it pulls back into this area. Now, if it was happening on this day, coming off of a low, that should be a high probability trade, since it's coming off of a low and it gaps up and it comes into support. Well, this is, and it could still go up. Right? This is what we deal with as traders. Nothing is just totally black and white. Right? It pulls back into here. Buyers are going to show up. That's a given. Well, if enough buyers don't show up and it breaks below the end of day base, that leads us to further analysis that says, hey, gap up, crapping out, short-term 1 bar top at new all-time highs, not a big deal. A red bar doesn't change the trend. But if it violates an end of day base, well, that's bearish. It's a breakout failure. So that's part of our bias today as we look at different markets that are moving up here. Put that gap in the context of where it moved from, where it's at, intraday price patterns. And right, yeah, Dan's saying the Fed today at 2 o'clock, of course. And everybody knows they're not going to do anything. So it's going to be what is he going to say from there? But everything that I'm explaining here is why we call this a thought process in the courses, right? I don't call it a module. You can call it a module. I can call it a chapter. It's a thought process, building together the things that we talk about in MT Live. That list of that we go through: candlesticks, multiple time frames, support, resistance, trends, relative strength, weakness, so on and so forth. And so that thought process is our analysis, rather than using the latest, greatest indicator. That's like, oh, is it overbought? Right? And are you getting a bearish divergence as it's going up? And for some silly reason, you decide to short it, and here you go, gold is gapping higher again. You know how many traders get taken out of the game because of some stupid indicator bearish divergence when they're trading against the trend in a situation like this where, it's pain. It's pain. So is it extended? Yes, it is extended. How do you measure extended? It's really simple. We just say, what's the distance from the 20 or the 50, or, but it's come out of a consolidation. There's support here. Has it closed below a prior day's low yet? No. So don't fight it. And it's new all-time highs. Don't fight that. So there's gold continuing to go up. So we'll look at silver. Now, on silver, that's what we call, right? It's a thought process, a wide range bar ending. Now, thoughts are beliefs, they're not facts. But what this does tell us in a reliable way historically is that momentum is likely to stall when you get a wide range bar after it's running up and it's extended. And so we see it's beginning to stall. Momentum is stalling. The trend is still up. There's going to be buyers on a pullback. And unless something severe happens, like big red bar down that creates uncertainty, buyers are gonna continue to think it'll keep going up because it is going up. Common sense. All right. SPX, nothing was touched yesterday. And I think that upper number is unlikely to be touched. I'm just looking at my other quotes. It's still there. So the call strike is way up there. And the put strike is down below 2 prior days lows and on support just above a whole number. Now, what's interesting, something's always interesting. The put side only came up a little bit, but the call strike extreme went up a lot from yesterday. And so that tells me, well, two things it tells me. Someone's willing to bet that it's going to go there today. And thinking, oh, it's going to be some explosive move, maybe. But moving from here to here and to get there, I don't think so. And so now you start putting together what I said before. End of day base. Right? Does it break below that? If it breaks below that, maybe it runs up to 7,000. Maybe, we'll see. And if it comes back in, if it violates this end of day base, well, then as intraday traders, we can start thinking about shorts. And so, this is from yesterday, these trader pivot lines. Do buyers show up there? Does it fail? We short a move up into a trader pivot line. So this doesn't have today's trader pivot lines on it yet. So those will probably move up. But these are all the things that you need to be thinking about and putting together in your trading plan. But as far as this goes, our average 5-day range is contracting. It hit a high of about earlier in the week, I think it was about 85. So the ranges are narrowing as this is going up. So here was a big 180 reversal, wide range expansion 180, and it's going up with relatively small bars. And that's good from the extent that you say it's going up, it's not breaking a prior day's low, but there isn't this over enthusiasm. So if today holds up and it goes up and you get a wide range bar, wide range bar ending, momentum's going to stall. So we'll see how it all unfolds. Right now, that seems to me pretty unlikely that it's ever going to get up there today. It is Fed day. We'll see what the guy says. No one's anticipating any rate cuts, so maybe some surprises, or he says something that sends it nosediving. But we'll see. Currencies stalling. Now, there's a lot of big deal being made out of the drop in the dollar, against the yen, and this carry trade, and who's in this carry trade, and what nightmare that might cause for the markets. And so far, nothing. And so I like to look at X, Twitter, and a lot of people posting stuff with their artist charts with all kinds of crazy stuff on there, crazy to me. And so many are looking for the market to crash. And so I typed in there last night, it's like S&P hit new all-time highs. Tomorrow, the NASDAQ is going to hit new all-time highs. And you people are calling for crashes here. There's no evidence of that yet. For some reason, the markets are ignoring that. So, but people get excited about things. And is it complacency? I guess we'll see in a few days or today or whatever it's going to happen. But, right now, you see that. You see, and it's a big deal. I mean, the dollar moving down like that. And this was a dividend, and it's going through some support, but it's not new all-time lows. But there are bearish implications and there are bullish implications for the dollar moving down like that. The other thing, as we looking through all of this, is interest rates, they spiked up and they pulled back here, and this is historical. That's a buy setup. If interest rates start spiking higher, well, then maybe something bearish does start to happen. They're not spiking higher yet. So And here's the 10-year bonds sell setup. And it's inverse 200 MA, broke below there. That says it's, there's a sell setup. Somebody's going to short that. And if bonds start dropping and interest rates start going up, and the inflation theme is going to come back again. We're going to be talking more about it. So all of this, we'll see what the Fed chair is going to say today. All right, let me get going here. And you can see this is the British pound futures uh, against the dollar, just skyrocketing higher. And I mean, a lot of times these currencies just do nothing, right? But just, Australian dollar. And then this is somewhat tied to the price of gold, but just, a gigantic move. Is that extended? Yes, that is extended short term. And you got a little bit of a red bar starting. So uh, looks like it's going to pull back a bit. And looking at the weekly chart here, you always look to the left and it's coming up. You can see the weekly chart. It's coming up to these highs up there. So I think it's likely to stall. The dollar probably stabilizes and we'll see what it all turns out to be. All right, let me look at Bitcoin, a few other things here, and we're done. Bottom of the range, it's holding. This is a pivot intraday. Look what I refer to as a little poke bar. It's not a pivot because it doesn't have 3 days to the left, but I know it's a resistance area intraday. You can see it right over there. Right over there. So it's coming up to some resistance area. Ethereum. Switch, bottom of the range, coming up there a little bit. That resistance. There's nothing exciting here as far as patterns that would communicate, a great setup here in the moment. So there's Nasdaq futures breaking out above the top of the range. Resistance is up there. Unless something happens where it nosedives, and that's not nosediving, just consolidating here. You'd look to the left, look for it to go up there. Dow's not doing anything. UNH dragged it down yesterday, but it didn't violate any support. Didn't close below a prior day's low. And there is the Russell. And so yesterday I was talking about IWM. We were looking at IWM starting to build a little bit of a base there on the 65-minute chart where it can retrace. And you can see my cursor on the 5-minute chart has stopped right at that pivot high and stalled. But this might be, since it's in an uptrend that gets the benefit of the doubt, maybe this can move up a little bit. We'll see. That's it. Fed day, some earnings reports coming out after the close. We'll see how it moves the markets. All yours, Dan.
Good morning. Yeah, sometimes Fed mornings, they rock into it. If people have a bias. But for the most part, I think they're choppy, more day trading situations. So we're not going to be aggressive on directionals. But if it's a beautiful setup, it's the same old discussion, personal choice. Do you want to take a smaller position, bigger stop, wait for the afternoon? Those are all personal, but I'll post them if it's a really nice one. For example, Sam gave me Charlie Mike here. That's a beautiful breakout. And so this is what a regional bank. I mean, that's a textbook gorgeous consolidation. Blasted, got extended, and now it caught up, and you have bullish price action. You have a red bar ignored. You have a gap reversal. You have red bar ignored. You have today's Wednesday, Monday's red bar ignored. You got a closing breakout, you got a bullish weekly. So we'll take that if it hits. I mean, you don't have to, it's personal choice, but that's a beautiful pattern. Greg mentioned the Qs. We're in the QQQE. My up alarm went off up here. So this one's all-time highs. The Qs wasn't. And that looks great. We're in that in the ETF litter. We're in gold in the ETF litter. Amazing runs here. Alarms, APPS. Bottoming pattern, up alarm went off. But I wouldn't touch this unless it had a closing breakout. Let's see, this high is 565. I'll set an alarm 564. But I definitely wouldn't play with junk like this ahead of head. For swinging, day trading, maybe 30-minute high would be good. But Titter, Alex, that's yours. Been watching. You know, still marinating, broke out, and it's trying to make the turn. Let's set an alarm at 1462. Galaxy. Sam gave me this. I like it as a put spread. It's kind of a flag, follow a bull flag. Here's your flagpole, counter trend channel. So put spread on that. SMCI, I posted as a put spread, gapping up. Just 2-day put spread is all. It's a junky bottoming pattern. Of course, hit my up alarm. If I move stop break even down here. Got a void, looks good. Jemaya alarm, we're in. So this blip set off my low alarm. It's just, it's, you know, buy setup triggered and it's going nowhere. Nothing to do. Car. Oh, car alarm. Okay, that shouldn't have happened. That was also a breakout and a buy setup. So just keep the original stop, which is under the big green bar. Circle, we've been in trail mode short. We're in it from this bear 1, 2, 3. So we have a nice open profit, gapping up. So move stop 5-minute high. And those are all my alarms. Let's go to earnings. Texan is at a big old gap, 214. It's coming in. Now that's a bullish gap. I wish it was gapping at 214 because then I would just say bullish, but fits into my category of short-term excessive. And I would consider a 30-minute low call spread for Friday, which is 2 DTEs away from today. But it's coming in. This one I like, STX, as a gap and crap. Gap, and I said exactly this yesterday when we were reviewing these. I mean, these are, you know, look how extended these are. This sector here on memory storage has been crazy bullish with the AI stuff. I said yesterday I would love for this thing, I forget what I said, 30, 40, 50 points. So I have that as a call spread idea. Just gotta watch it. NXT, that's a monster gap. So that fits in my category of what I say bullish, but short-term excessive. Let's watch that. Oh, back to STX. Let me check the two cousins. WDC is gapping 267. That's a $15 gap. And look, that's gapping in sympathy. This earnings is tomorrow. Impressive. And then SanDisk has been on a tear. That's gapping up, still not ready to fade. And then MU's kind of in this semiconductor storage sector also, gapping up to all-time highs. We're going to get a call spread on this someday. I don't know when. DXP gapping down, choppy downtrends. Low G91. That's junk. PPG, nothing. Cuervo Gold. That's an ugly gap. So that's an ugly gap. But does it fit in the category of ugly, but maybe put spread if buyers step up? I don't know. I'll tell you if I see it. But I'll leave it as a put spread idea. Because see, I mean I like fading big gaps like this on earnings also because the premiums track for two reasons. It's jack because it's earnings, and it's jack because of the big old either greed or fear gap. So you're getting a double whammy on premium. All right, package, no pattern, FF5E. Now that's an igniting gap. Now that's one I would not want to fade unless it was like a zero DTE, because that's a bullish gap. It's excessive but bullish. LRN, I was thinking of selling $50 puts on this yesterday. Remember, I made the comment that the options were so jacked that somebody was expecting a monster move. Well, here you go. Here's exhibit A of a monster move. Look at that gap way up here. Thing's been in a coma. There's a lot of these banks also that they're buy setups, but they came down so violently. Now this one's gapping down here, no pattern. There's another one. I don't know where it's opening. Man, H177. That's bullish gap. Maybe 30-minute high put spread. That's a shock gap over a red bar. Another regional bank buy setup came down hard, but let's see, I don't have any prints here. So we'll come back later. There's another one. They're all over the place. And there's another one. It's amazing. Another one. It's amazing how similar so many of these regional banks are trading. All right, so look at this. Also was going to be a candidate for me for a gap and crap. I mean, look at it. Close at 1455. If it were to gap to 1600, that's a gap and crap candidate. So I know the bigger problem is I know he's typically really spreading. APH 141. All right, so that's a nasty gap. That's a trap. That's a bull trap under a green bar. But gap into support, I have no idea what it's going to do. We'll come back to it. But 30-minute high, it may be one of those ugly gap, but excessive. GEV 689. Maybe this sets up a 1, 2, 3. If it doesn't go too deep in the yesterday's range, I don't like overlapping bars. AT&T's garbage. Progressive. I have a sell set up, but not a quality one because of this big old rounded bottom. But 30-minute low call spread idea. Wow, Starbucks coming back from the grave. Look at this, $83. Now it's at 102. Let me try to go through these fast. There's ADP, a gap breakdown, fall spread idea. This Golf Delta 3 tanked here pre-market. Look, it's not showing it yet here. That's kind of interesting. A big old nasty gap on military. On ELV, you know, these got whacked yesterday with UNH. This had earnings though. Morning. Remember I said yesterday this thing rocked the day before earnings, and I knew it was news, but I didn't know what. I read that it's because of a $6 billion deal with Meta. Classic breakout failure. That'd be a call spread, but I think traditionally he's very spreading. There's a gap breakdown. Tiva call spread 30-minute low short. Notice my man. Wow, that's an ugly gap. That's ripping.
SATS gapping out of a bear bull flag by a pullback.
This is a bear island reversal. Set. Yeah, 180. All right, let me go through my alarms here. I like earnings. We'll have to wait a few minutes. Sam, this was on your list. GNRC looks good. Buy setup. I'm just a little hesitant. It's still extended, but this was a Climo. So typically buy setups from Climos aren't as good, far from the 20, but it's bullish. Arlo, up alarm went off. We're short that as a 1, 2, 3. Wow, look at STX bottom right. Now see it. Wow. Remember I said this would be a great gap and crap candidate, but now that the data is scrunched because the market is open, it does not look like a gap and crap to me anymore. This thing it might go up another $50. I have no idea. That is amazing bullish. WDC, that is not a short. That's SanDisk. That's not a short. That's an extended bull rectangle. Incredible strength. All right, Iran was on my list. I was gonna post. Well, I posted to buy a pullback because I didn't like it. Had yesterday's range was like $9, and I didn't feel like giving a $9 stop. Hide alarm, but nothing. Getty's. Let's see, that's one that came down very hard. So I would only expect a 50% retracement. But Titter, I don't want to see how it closes, but I've been watching this for a while. That's not bad. But Titter, new alarm. Oh, I had an alarm at 1462. I'll just reset it. Charlie, Mike, Sam, it's triggering. That's you. That's a beautiful, beautiful breakout pattern. Charlie, Mike, 93.51. All right, the Dow had a big old spike there for some reason. Spike up. Well, in the context, it's really nothing. Amen out. Joby placeholder. That ain't my style. A and F. Let's 98.32.